Now, you've heard about high probability trading setups, and you probably wonder if they really exist. And oftentimes that term's used by marketers that say their trading strategies are high probability, and they hope to hook the novice trader with those words. Well, let's define what probability means. Probability is the measure of the likelihood that an event will occur. Probability is quantified as a number between 0 and 1, where 0 indicates impossibility and 1 indicates certainty. And the higher the probability of an event, the more certain that the event will occur. So I think the term high probability trading setup is misleading because it implies that whatever setup that's being referred to does not just have a probable outcome, but the outcome is close to certain. And the fact is that nothing is certain in trading. And when we talk about a trading edge, and the edges in the market are quite small, we're still talking about a random distribution of wins and losses throughout the use of the trading technique. Now, that's just semantics, maybe it is. But in trading, though, I think being exact in your thoughts is pretty important. Let's take support and resistance as an example. When price is coming down to a certain level that's rejected price in the past, we don't know if price is going to hold. So using the term potential support is more exact and reminds you that certainty does not exist. So if I was forced to use that term high probability in relation to trading, there's only a few places that I would refer to that for a high probability trading event. There are many good trading entry setups out there, but few of them stipulate where or when to use them. Sure, some of them might use another trading indicator as a filter, but that's not always enough to consistently increase the probability of a setup. So if you can identify where a market has the most directional potential energy, you will then find something close to a high probability trading setup. Now, obviously, in order to take advantage of any move in the market, you have to have a trading system that has a positive expectancy. And in order to understand the potential of your trading setup, there are basic trading performance metrics that are required to adequately assess your back-tested trade plan, your trading system, and track your progress as you trade it. Now, the markets have a varying degree of potential to make a concerted move in a single direction depending on a variety of factors. So let's think about this for a moment. If a trader believes that there's a good chance for a directional move from a particular price, they may decide to take a trade if they get a setup and see what they need in order to be convinced that the opportunity is a good one. If many traders believe in an opportunity, the chances that their combined action will precipitate the expected move are far greater. And of course, directional moves can start from anywhere, but they tend to start from key prices and times. For example, consider a market that's been in a trading range for the last week. It's currently trading towards the upper end of the range, and there's no reason, such as news or economic data that's just been released, to believe that there's going to be a change. At the high of the range is the maximum potential for price movement possible without the need for the balanced ranging behavior to change. So in this scenario, it's quite likely that there will be many traders who are persuaded by the location and the fact that there's not been a change in the context which created the recent range to take the opportunity. Now, that does not mean that they're right, but if they are, they should get a nice move for them. And if they're not, they don't have to risk too many points or ticks in order to find out. If you take trades when a market's poised like this, you're maximizing the probability of your particular trading technique. So let's take a look at some examples of where and when a market might have a decent amount of potential directional energy. Number one, let's look at the primary trading session open for your setups. And for many markets, the primary session open is naturally a time when there's a good chance to see a decent move. And this is because participants are at the most active at this time. And you can easily see this in a volume or a range heat map like this one here for crude oil. In particular, if a market is opening some distance from where the majority of the price session's trading activity executed, either the market is going to correct or it's going to retrace back to this zone, or there's a reason why it's moving away and the move could continue. Number two, session and range gaps make for high probability trades. In the same way, a market that's gapped away from the closing price, ideally beyond the high or low of the prior session, is showing that either it's moving strongly in that direction and it's likely to continue, or traders have got ahead of themselves and are going to need to cover their positions as the market retraces that gap. Now, in general, gaps are most prominent when charting the primary market session. They also tend to be the most important. So once a gap starts to close, it often closes or at least pushes a significant way. A failed test into the gap and new extreme on the opposite side for the day often leads to a gap continuation. Here's a chart with two examples in the S. One gap closes and one gap continuation. A strong impulse move can lead to another for a possible trading setup. So when you get a strong move in a market, there's often at least a secondary attempt in the same direction following the pullback. Now, recognizing this, a trader can look for a setup that could be classified as a high probability trading setup by virtue of the momentum in the market to take advantage of that once the pullback starts to roll over. Now, the caveat to this is that you need to understand what a big move is for the time frame that you personally trade. A 20 tick move might be huge on a 233 tick for some products, but if you're trading a 610 tick, it could be the norm. Do the stats work in Excel so you know what's abnormal. Number 4, the trading setups with balanced or ranging markets. Now, balanced or ranging markets have at least two reliable places where something is bound to happen, and these are at the extremes of the balances. This could mean the high and low of the range, or, in like this example below, the pattern which defines the balance. Now, these are where either the market decides it wants to remain in balance, in which there's plenty of room to trade back into, or it decides to break out of the recent balance and explore different prices. But in both cases, there's plenty of scope for a large directional move. The point to recognize with balances is that they are far more reliable in their action when they are based on a longer time frame. And I tend to look for balance over several days, at least, to find places where a big move could happen from. And you can classify those as high probability trading setups. And the example there has a 2 months balance. You shouldn't expect that a strategy is going to work in every location and every moment in time, even if it does have a high win rate. By targeting trades that occur when a market has a high level directional potential energy, like some of the examples we've talked about, and staying out of the noise, you're adding a reason for other traders to get behind you, and you're targeting high probability trading setups. Combining a good entry setup and technique with good location can give your strategy the best chance of generating winning trades for you. Now, are these high probability trading setups at these locations? I think it's as close as you're ever going to get. Our options trading specialist, Mike Rixey, wants to help you up your chances of finding success trading options. And to do so, Mike has put together a free report called The 6 Breakthroughs to Winning at Options to show you his plan of attack when looking for trading opportunities. He also wants to share with you his top 15 names to trade so you no longer spend hours chained to your desk poring over the many choices that are available. Enter your email address here to the right, and you will get immediate access to this highly specialized options report, free.